the standard cycle that a couple of banks are going through. Overall, yeah, I think it's headed in the right direction.
Okay, I think the meeting has started, so you can
Yes.
shoot your questions.
Sure, sure. I mean, you've been quite active in sort of these calls, and we are regularly updated with what's happening. Just the usual question. How do you see the portfolio companies operationally? It's a holding company, so at the end of the day, you rely on your holding companies for a regular stream of income as well as any upside. You mentioned in the report that the sort of rental income has taken a bit of a hit. So if you could just touch upon that. How do you, as sort of a holding company, see the portfolio companies and the performances? We've seen the mark-to-market impact on the P&L, but just probably just a few sort of comments on how do you see Oman National Engineering and National Gas and Jazeera? Just the standard questions. If you could just touch upon that, a brief comment, please.
Okay, so there's a whole host of questions there, so I'll try and take it one at a time. So lease rentals are progressively coming down because of the nature of how these lease rentals are designed. So these are, typically long leases where the rental component, comes down significantly over a period of time. But at the same time, cash flows are positive and we have that long-term relationship with the client. So from a accounting perspective, it's good. From a P&L perspective, it is, it is on a decline. So to compensate that, we have kind of tried to build a portfolio wherein, you have sustainable cash. So we've in the last year rolled out a significant bond portfolio and taken advantage of the fact that the interest rates have been in our favor in terms of yields. At the same time, legacy investments like Oman National Engineering have slowly also beginning to start showing some strength, both from their core portfolio as well as trying to broad base their own, business in terms of doing e-commerce and being a collection agent, electronic collection agent for a lot of the government facilities, which means, Mulkiya and the other things which require collection from the general public. National Gas continues to kind of, still face headwinds because of the nature of the business they are in, because they are in a subsidy environment and the subsidy has not really improved. But their Malaysian operations have been doing reasonably well, and they are looking into Saudi as an expansion. But frankly, that's going to take some time. So we're still staying invested, but at the same time, we're watching it. Al Anwar Ceramic Tiles, to be honest with you, the Saudi customs regulation put a big spoke in their wheel in the terms of being able to not only, able to export, but also at the same time be able to match the prices because of that incremental cost. I'm sure you must have met them too, but, for the size at which they are, these are challenging times as far as their Saudi exports are concerned. But they're trying to compensate it with other sales. And I think at some point in time, from what I hear from the market and elsewhere, is that the customs refunds have also begun to start coming in. Not in full measure, but at least they've started. That is my last understanding when I met the management. So overall, focus has been on the fact that we make sure our cash flows are sustainable. We are still a zero debt company, so there is that opportunity there of leveraging if an opportunity presents itself. But at this point in time, we have the surplus, money that we are busy rolling out. Dividend, well, that's a board decision, but given our cash positions, I don't think it's a challenge at that point in time. But I am not allowed to comment on it, so I shall not. The book is clean in the sense that we are not facing any challenges as far as the organizational, day-to-day management is concerned. So that's a clean book. We will continue to focus on fixed income. We are busy also looking at equity investments on a slow rollout basis in the GCC markets. Markets have been volatile, so we've been a bit selective about the way we want to go forward. But eventually, as the year rolls out in 24, I think we will see more and more exposure to equity as a longer term bet for regional growth. Did I cover all the points? Let me know if I missed out anything.
Yes, very well explained. Thank you. You mentioned that you've sort of opened up a bond portfolio, right? What would be the tenor and the sort of average yield on that?
Yeah, good question. So when we started off in 22, we were doing most of the maturities was anything between 3 and 5 years with a typical yield looking at anything between 5.6 and 5.9 or close to 6. And we've done a certain rollout on that. We've built a portfolio. Now we are also trying to build a longer term book, which is say 5 to 7 years. So the objective is to look at a gradual, balanced book as far as the yields are concerned and as far as the holding capacity, because we're looking at it from a YTM basis. And we are also kind of betting on the fact that interest rates will eventually soften up, and then that would kind of lead us to some sort of capital appreciation also on the portfolio. So we are looking at currently an yield perspective, but a little bit of an eye on capital growth in the medium term. When I say medium term, I'm looking at 2.5 to 3 years beyond.
That makes sense. Fair enough. With regards to investments, I understand that the trading portfolio and the GCC markets in the US market will be part of that. But sort of from a strategic investment point of view, and you currently have National Gas, Jazeera, you have Oman National Union. If you were to consider sort of any changes to that in the medium term, what would be a target sort of IRR or a target return sort of that you would target before getting to an investment?
Well, yeah, internally, I would say low single digits. That would be a sweet spot. But anything better is always good. I think the bigger question is what is the nature of the investment and how long is it sustainable? Because some of the legacy investments also go through cycles, and they face challenges in the near term. So, for example, Al Anwar Ceramic Tiles was a blockbuster a couple of years back, but now, obviously, things have not been so good. So, if I were to look at it from a fresh investment, I would look at it as a low double digit, and then look at it from a perspective of how much growth it can, bring to the table. So I think it's a double-edged sword in that sense.
Sort of, you would be sector agnostic when it comes to these strategic investments, or you would still sort of try and focus around, a couple of or a few key sectors, or you'd say, this meets my requirement. It's low risk, good cash flows, reasonable growth in line with the economy growth, and it meets my return requirement. And then, irrespective of the sector, you say this is a good company, so I'll do a bottoms up and sort of look at the company, and then it fits in my portfolio. Would that be a strategy, or would it be sort of?
Good question. Yeah. So, legacy-wise, the real estate component for which this company was formed has really performed well. So there is always that little soft corner for real estate associated long-term projects. Now, unfortunately, those IRRs don't really exist because competition has kicked in, valuations are steep, and a lot of these projects do no longer have that kind of, But given a choice, a good large-scale real estate project might really be something that we would look at very seriously. But on the other side, we are agnostic in the sense that we are seeing a lot of opportunities from the region also, and So we are looking at it from a point of view of participative kind of project, wherein we are minority stakeholders and look at it from a longer term perspective. But at this point in time, valuations are steep, so I can't afford to be choosy. So we are looking at it at every kind of this. We are looking at new projects. We are looking at infrastructure build out, rollout happening in Saudi Arabia. The logistics sector in the region. Couple of companies which are going through turnaround here in Oman. So to answer your question, we're keeping an open mind, but at the same time, there have been a lot of valuation challenges that I'm seeing.
Cool. And opportunistically, you have your eyes on sort of any opportunities that come by. You keep a close look, and as and when you feel it's the right time from a valuation perspective, you would probably consider it.
Absolutely, because see, look at it from the project perspective point of view. Interest rates have gone up, so a lot of repricing has happened. A lot of projects are being re-looked at from a profit point of view, yield point of view, sustainable point of view. So that has become a challenge in the recent past. When I say recent past, in the last 1 year. So I can't afford to be choosing. I'm kind of looking at all kinds of opportunities.
That was mainly from my side, just to understand where things are currently. You've been kind enough to do these calls we're very well updated. And yeah, that's it for me for now.
How do you see it from your perspective, since you were, how do you see
depending on
holding
sectors,
companies?
Sort of, typical textbook approaches. There's a discount commanded because of the nature. But in general, I think eventually it will all boil down to the quality of assets that an investment company holds. And some are sort of more financial oriented, some are more industrial oriented, or more real estate oriented. Like you rightly said, all sorts of sectors go through different cycles. So if I look at, and Anwar Ceramic, you hit the nail on the head. If you look at that company over the last, let's say, 3-4 years, it's gone through that entire sine curve where, say 3 years back, pre-anti-dumping, the company had intense competition from China, India. Market share was a problem, realization prices was a problem. And then you had anti-dumping was implemented, and suddenly you saw the stocks soaring because of operating leverage. To the extent where the company, announced 2 phases of expansion, and it was operating at full utilization. And then they said, we've had some implementation of anti-dumping in a couple of the countries. Freight costs have gone down. On top of that, interest rates went up. This custom duty came out of the blue for Saudi. So even though these companies in Oman qualify for the exemption, the sheer process of sort of proving that took longer than expected. Now, yes, we have also heard that the first round of refunds for at least Anwar Ceramic have started. But is it on an ongoing basis? The impact has already been there for almost 6 months now. So cyclicality is a nature of business. And effectively, even from an investment point of view, it would all be contingent upon what let's say the focus area for that particular investment holding company is. That's just my 2 cents on this. I can't claim to say that I know them inside out, but that's at least the way we look at them.
No, that kind of pretty much sums the situation, because the challenge is that every time there's a repricing on the borrowings, it hits your bottom line, and then you are having challenges based on customs and export and cost of. So it kind of gets exaggerated further. I see your point, but there's still opportunities happening, and hopefully we'll be able to kind of encash on it, or at least be participate.
Sure. Like you mentioned, debt free, that itself has it's undervalued, I think, almost. Not having that obligation where interest rates can significantly damage your bottom line, to the extent where you're on the other side, where you said, because interest rates have moved up, I today have the option of sort of booking, a bond portfolio or a fixed income portfolio at a higher yield. So I lock that in, consistent cash flows, extremely safe, and then that helps you in a market where most of the companies are struggling with higher interest costs. A lot of industrial companies, especially that we've spoken to, they've seen a huge dent because of interest costs. Utility companies as well. So I understand that, and in times like those, you appreciate not being over leveraged to have a portfolio. In a good market, of course, that leverage cost is insignificant to the sort of return potential, but that's the nature of the business and that's the nature of the strategy that you undertake. So in a time like this, it benefits you. Yep.
Absolutely. Absolutely. Thank you.
Yeah.
Thank you.
Yeah.
Appreciate it. Yeah.
Yeah, I don't know. Most welcome, and thank you and all the best, Rajesh, to you and the team. And yes, I look forward to our next interaction.
Sure. Thank you.
Yeah.
All right. Most welcome, Rajesh. Take care.
You
Thank-
too. Bye-bye.
Nobody else will be coming.
We have no more participation, so I guess we will close the meeting.
Okay.
And thank you. Yeah.
Okay. Thank you.